Hey, everybody, welcome back to the Vancouver Real Estate Podcast. We all know that the Vancouver real estate market has been stumbling recently, but what about Toronto? How bad has the Toronto real estate market been? Today, we talk about it in depth with the hosts of the Canadian Real Estate Investor Podcast, this Daniel Foch and Nick Hill. Daniel's also a real estate agent in Toronto, and Nick Hill is a commercial mortgage broker in Ontario. So, two great guests today to unpack just how much destruction is happening in Toronto. And yeah, Matt.
They don't pull any punches, that's for sure, Adam.
No, they don't.
Spoiler alert, it's not good. It's not good in Toronto real estate land right now. We appreciate everyone who watches the show and tunes in. If you're enjoying the content, please hit like and subscribe and enjoy.
Okay, so we're here with Daniel Foch and Nick Hill, past guests, and of course, hosts of the Canadian Real Estate Investor Podcast. As well as Dan's, you are a real estate agent in Toronto, and Nick, commercial mortgage broker in Ontario as well. So welcome to the show. Thanks for taking the time today.
Thanks for having us. Yeah, I think we're going to do round 2 of the Toronto versus Vancouver showdown on who's the worst market in Canada. Is that what we're doing here?
This is round 1 on your show.
So I feel like we talked a lot about Vancouver, but we hardly got into the details of Toronto, except for a shocking stat about the price per square foot of some new construction. How is the Toronto real estate market right now? Are the headlines right?
It's the worst, yeah. It's like, I mean, it's hard to overstate how bad it is. It's the worst it's ever been. It's definitely the worst in the country. I don't know. It's bad, very bad. It is like, this is like that moment. Like, I always think about it in reference to my parents and talking about, the 90s, so bad, the market, and it went to a halt, and it's like, you can't really contextualize it until you're in it. And now you're like, I literally will be talking about this for the rest of my life to my kids. That's how bad I think, right? Yeah.
It is funny that I was thinking about this the other day. 6-7 years ago, you'd always run into those old timers that would be like, you don't remember, but now this is the 90s moment or whatever.
We're not old timers yet, though, fellas. Come on, not yet. Yeah, no, I mean,
sorry, go on there.
I was just gonna say it's bad. I had a friend put out an article recently, and me being the only non-realtor on the show here, which what makes me happy, but also makes me feel a little left out. Misery loves company, I guess. There's Dan, and maybe correct me if I'm wrong here. I believe there was at one point 90,000 agents registered on Toronto Real Estate Board. I believe that number's dropped to about 77 to 80,000, and most of them did not do a deal last year. Okay. And this year will be worse. And I'm on the mortgage side. I've done a lot of residential over the past several years. I'm more focused on commercial, which I'm lucky enough that I can work across the country. So I'm not specifically just, pigeonholed to the Toronto and GTA market. But it's the same thing for mortgage brokers. Most mortgage brokers won't do a deal this year. So, that ripple effect of, okay, it's bad for buyers, it's bad for sellers, it's bad for renters, it's bad for all the professionals that are involved as well. If you're not buying, building, selling, well, you don't need property managers. You need less inspectors. You need less appraisers. And, all of this stuff makes up our GDP. And that ripple effect is, that probably referencing that article that you mentioned, Matt, of, the economy here is not doing too well. And
Toronto is contagious.
It's no mystery. It's no mystery why it's not doing well.
Is it? So the headline, it's bad. It's as bad as it's ever been, maybe worse than it's ever been. Can we maybe peel back the layers of the onion on the Toronto market a little bit? Like, is it like, okay, downtown condos are terrible, but single family homes in Mississauga are great or whatever?
It seems to be pretty indiscriminate, to be honest with you. Is there a bright spot? I mean, first time homebuyer product, probably anything on the close to the price floor seems to be doing okay. And the faster that things can get to the price floor, the better they do. So, condos, we're seeing condos in the 300s again. They're moving. If they're not like a shoebox, there's a couple of cities in the furthest line on the exterior of the GTA, like to the point where if you call it the GTA, people will tell you it's not in the GTA, even though it is technically, like Oshawa, Georgina, Bradford, like a couple
Peterborough,
of,
that's pushing it though,
Barry's not technically in the GTA, neither is Peterborough, but like those markets seem to be doing fine, where somebody might like, your first time buyer who got like completely left out of the market for the past like 5 years, and they don't like, they know they're taking risk, but they're just like, they don't care. They're like, I just don't ever want that to happen again. Those are the people who are kind of starting the knife catching contest, I think. Otherwise, like everything's toast.
It's funny, because I feel like we're going to be dealing with the scarring of the last 3, 4, 5 years for a long time, right?
Sure.
Like it's one thing to purchase a pre-sale, but if you or a friend or a family member it got really burnt in the last couple of years, like I feel like that's a generational kind of caution.
Yeah.
But you're actually talking about it from the opposite, right? Like there's still people active in the GTA that,
but that's the people who
remember
didn't
all their
have
friends got in, right?
And so there are, I guess there's two different stories, right? Like there is the people who maybe got in early, really believed in the real estate asset class, was telling everybody on Twitter, have fun being poor or whatever if you don't buy. And then they're levering up, going, levered long on 5 pre-con contracts at $1,400 a foot. They're toast. Like they're done. They're like that meme in Tiger King. They will literally never financially recover from that. It was a mistake that will hurt them for the rest of their lives. I hate to say it, but that's like the reality for a lot of people who got messed around in that space. And then there's people who didn't do that, were scared and felt the risk and were bearish in 2020 and 2021. And they're like, and it kind of saved them. They didn't buy at the top as a result. And now it's, now we're down 20-30%. And they're like, is it going to get better than this? Or like, I know at least I'm getting like a discount from what I originally thought. And they're actually starting to creep back into the market because they don't want to see that happen again. And they don't know if it's going to, and they're paying rent or living with family or whatever. So the qualitative factors are starting to align. So yeah, I think there's two stories, right? There's the speculators and even like investment space. And then there's people who just want a freaking house to live in and they can get one again. So they're doing it.
Well, it's just
What about,
normal real estate transactions, right? Like I move, I have a kid,
Right.
I've saved up, whatever. I missed the craziness and thank God. And there's literally a whole culture out here now. People have literally made big names for themselves on probably specifically Twitter, but Twitter, Instagram, and Reddit, etc. Literally just posting, I don't know if this is the correct term for it, but like basically like loss porn, rage bait stuff where $500K loss, $1 million loss.
Yeah.
And you look at these houses and you're like, that someone bought that for like $2.2 million like a year and a half ago or 2 years ago. And it's just the most standard looking home. And, it's still selling at a ridiculous premium at like a 1.2 million or 1.4 million, but there's an $800,000 loss being realized. And to Dan's point, we've all lost money, doing one or number of different things. $800,000 is a lot of money to lose. And, if you're not a business person or if it's not through a corp or you can't declare bankruptcy or there's not strategic ways out of it or around it, how does a normal family or even a bit more of a well-to-do family come back from something like that? It's really sad.
And is it like, so just thinking about the different segments in the market, like, so here, one of the stories is that the end user product seems to be outperforming. And when we think about the province, like where there's fewer investors or like where there's just more people living kind of regular lives and moving through the market, those markets tend to be more resilient in the province. Are you seeing that in Toronto as well? Like, is end user product outperforming or like how's the detached market?
Well, detached is fine in markets where it's affordable, right? Like the problem is like you don't have a lot of wealth, and we thought we did, but it was actually debt, right? So you're trying to catch the income curve, and we're still really far away from it. Like, the end user product in Durham's like the cheapest market, right? Like you go to Durham, it's like not ripping, but like it's doing fine, right? Like in that you can get a house there for 5x of Durham income. You go to York Region, which is a little bit more luxurious, or Halton, where like Oakville, like King City and Oakville are like two of the wealthiest municipalities in Canada. They're in York and Halton. Those markets aren't like, there's no buyers because nobody can afford to buy those houses. And your step up buyers would be selling a house to them, but they're taking a huge write down. So that we're just at fundamentals, right? Either the wage curve needs to grow 10-15%, which it will over 3 years, and that's what it'll take. I don't know how much time it might take for us to find a bottom, or prices need to come down faster. And if prices come down another 10%, then you're getting way closer to the wage curve. People can start to afford to buy houses again. The market can think about recovering. Rates are like the one X factor, that if rates come down a little bit, that can, boost the buying power a bit and whatever. But as it stands right now, like, it's just purely limited by, like, so yes, there are people who want to buy that end user product, but there aren't end user products that are affordable. I'm sure you guys are seeing the same thing with first time buyer stuff, right? Like, the Fed puts out this thing, first time buyers they're going to get this tax back on brand new homes. It's like, a first time buyer is not buying a house in our city, right? Nowhere, not even within, an hour drive of Toronto.
Yeah,
so it
like
doesn't
a
have an impact.
misunderstanding of how the market, at least in Vancouver, works.
Or developers not delivering $1 million new house in our city, right? So that tax thing's irrelevant to your first time buyer who wants a single family house.
Yeah, I mean, outside of the very select lucky few that have the backing of the very specific bank, the bank of mom and dad, where down payment gifts are in the hundreds of thousands. Yeah, the average person just can't do it. I mean, I'm going to misquote this, but I think it's like, and I'm sure it's probably not far off in in Vancouver, but to live an average life at this point in Toronto, you need to be making $250,000 as like a household income. For some people, that's not a crazy amount of money. For most, let's not forget, the average Canadian income is about $68,000. So, that tied with rising unemployment, tied with the price of just about everything these days, it gets a little bleak when you start really looking at the numbers.
Can we talk a little bit about the vibe in Toronto right now? Like the
vibe sucks right now, man. Today's
because like we were talking a couple weeks back on our show about it used to be that you'd go to a party and like it was like I'm in real estate.
Yeah,
everybody's excited to talk to you about it. Yeah. And everybody's excited to tell you about what they bought and what they're going to buy and what they own. Presumably that was
it's still all we talk about here. Yeah, no, it's still all we talk about.
It's just doom and gloom.
Much different conversation. Yeah, you're like, can we talk about the vibe? It's like, no, we can't, man. I'm sorry, we can't. Like, we're not allowed to do that. It's the same conversation.
Matt and I haven't been to a party since the market was good, so we're
you guys are still
telling everybody we're podcasters now instead of real estate professionals.
So the best way that I've like the bellwether that I have is like how bad the vibe is like. The real, like, I used to get like RICO complaints, okay, like complaints to our like regulator because of talking bearish about the market. Like that was 2021 the vibe, okay, and then now and I was like, and everybody was ripping on me for being so bearish and whatever, and now people are calling me too optimistic. Realtors are calling me, the realtors are more bearish than me. Like, and I'm like just a natural contrarian. So I'm like, frick, these guys are making me want to call the bottom. Like the way all these realtors are piling into the inverse realtors is the trade, right? So, I'm like pretty close. But that's like the best vibe check that I've seen is like, I'm not the most bearish person anymore. I'm still quite bearish, but like other people are arguing that I'm not bearish enough.
Which is hilarious. I'll drop a little something that I've been working on with some people in my office for a while now with this crazy kind of AI stack. But we've built for those unfamiliar, there's something on CNN called the Fear and Greed Index, which basically manages the market sentiment. Right, it goes from extreme fear to neutral to greed to extreme greed. And we built one of those out for Canadian housing, pulling from every source you can imagine from across the country, all the way from CMHC to Stats Canada, Equifax, mortgage delinquencies, credit ratings, sales to new listings ratio, days on market. We've even pulled stuff from LinkedIn, Reddit, TikTok, Instagram. And since we've been pulling this in kind of beta for the last couple months, man, it is painting a bleak picture. And we've done a lot of research and on sourcing all of this stuff before actually releasing it. and it's kind of the first time I'm openly talking about it. So you're welcome. But
You heard it here first.
You heard it here first. But yeah, I mean, it's not good. And I mean, look, sentiment is what really, when everybody talks about, everyone's sitting on the sidelines, where have the investors gone, et cetera, all of that. That just means sentiment. That just means people are not feeling comfortable or confident enough to go and spend money and transact and take risk. And that's really what drives the market. So, vibe check, Matt, the vibe is not good. And I don't know what, maybe summer, the vibe will get a little bit better, just a little bit, just because it's been a pretty brutal winter here. You Vancouverites don't have to deal with it. But it has been, essentially nonstop snowstorms. But Dan, I saw that thing you posted on, I think it was LinkedIn today, where it was like, the market is not just snowstorms and winter. It's still bad overall.
It's like, it's just funny. Like, this is okay. Like, this is just the vibe, man. Like, I'm glad you guys asked, because it's like Toronto realtors are like, our stats came out like last year. We're the same thing you guys prefaced, I think, in the episode we did on our show or at the beginning here, is worst market. Like, we had the worst year ever, and then now we just had a worse start to this year, so we had the worst year ever in Toronto, like as bad as the 90s, with 10 or 30% more population, and January was 20% below that so far this year. So it's like we're coming out of the gate bad, man. And then realtors are like, but it's been snowing a lot. Okay. Like it's, there's been a lot of snow, guys. And don't get me wrong.
What excuse do you guys have on the West Coast? All right.
We did get a record snowfall.
The buyer
okay?
couldn't get to the open house. Yeah.
But before, exactly.
None of
them. Like, the buyers are stuck in their houses. Everyone's snowed in.
It's funny though, because here it's like, oh, but it's been raining and it's this and it's that. It's like a like Price is Right spinning thing to figure out why the open house was slow.
Yeah. So
choose your excuse. Yeah.
Like, we fully run out of reasons why the market could possibly be so bad, and it's like, it's just like, pay attention to what's actually happening, dude. Like, go talk to your buyers. Like, who's going to go and lever up and bro down on the biggest investment of their life when they don't, like, when they work in the auto sector? Like, Toronto is super exposed to this Kuzma stuff, right? I honestly think, like, when I think about the Trump stuff, it's like he's got more of a target on Ford because of all of this stuff, honestly, because they have a pretty good war going, than anywhere else, because it's all auto sector, and the GTA is getting smoked. So why, if I'm a buyer, why would I do this facing this uncertainty? This is the vibe. Snow is the answer.
Yeah, but it is interesting to think, like, it's like ground zero, I guess, is what Windsor, the close to Detroit there, where the Gordie Howe Bridge is being built.
Oshawa's big. I mean, Toronto's like the second highest unemployment in the country. Oakville's got a huge Ford plant, but that's been like shut down for retooling for like a while. Brampton lost 3,000 jobs for Stellantis to the U.S. because of the trade war. So I think, like, there's quite a few, but it's all just kind of combining too. Then there's downstream effects. Like, it's, then it's Magna, auto parts manufacturers and distribution and blah, blah, blah. And then it's consumer, and now the consumers are smoked. So it's like, we're just going to get it really bad.
Yeah. Yeah. But I guess I'm thinking, it does feel like the tariff talk is, and as goes Toronto, goes the rest of the country, maybe, but Toronto is specifically in the crosshairs here in a way that it doesn't feel like out here. I mean, every once in a while you hear softwood lumber, but
yeah. You guys have a bit more of a diverse economy in that regard. Like, we have a couple of vulnerable sectors, and like the one we tried to diversify out of that into housing, right? So it's like condos and cars, man, maybe cannabis too, right? The three C's of Canadian economy. But the Oxford Economics and the Canadian Chamber of Commerce did some studies on this, and like they mapped it, and it's literally just like a line, the 401 corridor, that like the Italy boot of Ontario is like basically just blood red. It's like, that's where all of the pain's gonna hit, and that's what's happening.
And let's not forget that along that 401 corridor, that's where 1 in 4 Canadians live. Right. So I mean, that ripple effect is huge, and unfortunately, we see a lot of those people that flee that kind of corridor for affordability. Some of them end up in Calgary, right? Calgary and Edmonton were still number 1 on the U-Haul index, which is kind of U-Haul tracks where vans and trucks were rented and kind of where they were dropped off. but we've seen a ton of brain drain as well from a lot of the major markets. Like, it seems like there's not as much of a love or an incentive for entrepreneurs, business owners, high earners to stay here right now. And that's not just the weather right now. That's just the economics of it, right? I mean, you guys are business owners and entrepreneurs, and you've been talking to the likes of business owners, entrepreneurs, and great minds in Canada for years now. And I think that's just been a problem. It's just been getting worse and has really become exacerbated quite quickly with the trade war and that super slow growth of the economy. I mean, we've done episodes where we're basically covering, okay, we've had a lost decade, but if you really look at it, almost no GDP growth over a 10-year period. Well, that's almost happened 3 times in the past 40 years. We're all in and around the same age. That's basically our lifetimes where Canada has barely grown as a country. And when real estate makes up like a quarter of the economy, or real estate related activity makes up a quarter of the economy, and that gets hit, it's no shocker that things aren't good right now.
I just one more kind of down the Toronto market rabbit hole here. The market, I think both Vancouver and Toronto saw pretty significant shifts. It was like mid 2022 kind of interest rate increases started. When and from afar, it seems like pricing has come off over the course of the last 3 years, a bit more dramatically than in Vancouver, but also earlier it seemed like there was kind of some shocking numbers coming out of Toronto. Where are we there? Are you seeing like bigger declines right now, or was it a year ago? Or are we getting to that point where it's like, okay, the declines are really starting to ramp up right now? Where are we in the
I don't think they're not getting faster, but they're still just like pretty shocking on a year-over-year basis. Like I don't even know if it doesn't have to be fast. It's just like the perpetual, like, is not stopping. It's incessant. And we saw the big drop. Like, so I think we blew off like 15-20% in year one off the peak. So, it cut off like 5-10% of froth, 10% probably on actual values. And then we've basically been grinding down since then. Like we're 30% off peak and not showing any signs of that slowing. And Rob, an agent at my office, Rob Marsiglio, he's a YouTuber, and he does like really, really good micro analysis on Toronto, like probably the best micro analysis on Toronto. He just put a chart out that shows we've now seen 17 months in a row of year-over-year declines. Like, so it's, when we talk about vibes, it's like, it doesn't have to be a headline. Like eventually people just can't ignore, you hear it. Like there's never like that aha moment for people. It's just been this gradual grinding down of people where all they're hearing for 17 months in a row is bad news about the housing market. And if you're a buyer, it's like, well, why would I buy right now? I might as well just wait another 17 months for prices to be lower again until we hear some good news, which is going to take a while. That's the sentiment piece. And we're at the point where it's just like, it's poisonous. It's like everyone's been bear pilled, man. It's crazy. There's no room in the bear den for me.
How much, Dan, I know, and I just, the only reason I mention this is because I kind of fear it myself. I was thinking about, I was thinking this is a great time, at least in Vancouver, to move through the market. Like you can get some pretty incredible deal. Like, if you're in say you're in a townhouse or a more of an entry level detached house and you want to buy a larger home, it seems like a lot of people are doing well moving through the market. The only thing I'm kind of aware of is the fact that there's also a lot of, people concerned about AI and job security. What do you think? Are you guys hearing from clients? Like, are people actually? Is that just contributing to people's concerns around job security and taking on more debt? Like, has AI played a role?
Question.
How much does the AI story contribute to that index you're building, Nick? The index you're building with AI. Yeah.
Well, I couldn't have built it without AI. So, and I'll let Dan. I'll say one more piece, and I'll let Dan jump in because he's really been spending more time on it than I have, and has done some pretty great things. I think it's just anecdotally. Dan and I have been lucky enough to travel the country for events we host, for the podcast, et cetera, et cetera. And this has been a kind of topic on everyone's minds for, I don't know, a year, basically since ChatGPT kind of came in and was like, wow, you can, it's a way better Google kind of thing. And that has just been left in the dust, the way that people use it. And I think every time I ask someone about AI, they're like, yeah, it's amazing. It's also freaking terrifying. That seems to be the most standard response. And then you start to see these stats and headlines come out. It's like, 20%, 30%, 40% of jobs are going to be replaced. And I think there was this big misconception that it was like, okay, yeah, it's going to be all the lowly jobs, the stuff that people don't want to do. Well, it's you still got to make your bed and you still got to call the plumber. But it's going to be HR departments that disappear. It's going to be real estate and mortgages and, the more white collar, attractive jobs that people, were pulled to that are going to be, I think, the first hit. So I think there will be a reckoning. I'm not sure what it looks like. My whole hedge against AI is just trying to be a good guy and have a human element that people want to work with someone, and really trying to get ahead of it and use it for my benefit and not get left behind. I think there's a big difference between that relationship business, which we're all in, versus just relying strictly on AI. But I think if you're not stacking AI into whatever systems and processes that you're using already as a real estate professional or whatever the hell you do, you definitely should. But I'd love to hear what Dan has to say, because again, I'd call him much more of an expert on it than myself.
Yeah. I don't think people are giving it as much credit as they should yet. Like, I don't think a lot of people are. I think Nick's right. Like, there's kind of that like, you're seeing it out there a little bit, that people are aware, becoming AI aware, and like acknowledging it as a risk on the employment side, and that it could create, destroy a lot of jobs. But I don't know if consumers are super, and I honestly think like we write our own, like it's like a manifest destiny kind of thing, right? It's, like, I don't know if as a result of that, I don't know if it will end up being as profoundly, like I use it I work in an AI powered real estate brokerage. We're launching a SaaS that literally like has completely changed my life. Like OpenClaw in the last like month and a half, which is basically like AI with hands. Like it can do anything for me. I can text into it. It could do like
not physical hands. We should
claws. That's why they
get
call
too
it
carried
claws.
away.
Well,
here,
it's
everyone.
like it's kind of
physical claws. Okay, go on.
Yeah, but it can do a lot of things that like I would have given to a VA or like just I'm not doing outbounding for sponsors for the bit, for events or whatever. But I actually see that as a net increase in productivity. Like I didn't fire anybody for that to happen. Right. And I'm not going to. And I think maybe like certain things like, repetitive tasks, call centers, et cetera, they'll probably see that. Anyway, I don't want to get too much into my own vision of it, but if you just look backwards historically, I think people are going to be like not giving it enough credit. And then you'll start to see some layoffs, and there'll be like this mass panic, and then and it'll probably be overblown, and then it'll actually end up being net productive. Like if you look at 200 years ago, firewood was like 25% of the U.S. economy, right? Or 200 years ago, right? If you go to, and then natural gas happened, and it's like we're all the lumberjacks like worried on Twitter about like no, and now it's just a different economy. You go back 100 years ago, agriculture was like 80% of the U.S. economy. Now it's what, like less than 20. So these shifts happen, like the massive shifts happen a ton over time. So I think consumers are giving it like just enough credit. But all of that to say, like it is becoming part of the narrative for sure.
Right. No, that makes sense.
It's funny because but Adam, you were saying you were talking to somebody that has a good job and is, in a comfortable house and thinking of moving through the market, and they were like
taking on another.
Maybe I'll just hang tight.
Well, yeah. I think here's the thing, right? It's just like, taking on another $700,000 on their mortgage or something like that, right? Like it's just funny, moving through the market.
Yeah, I was just gonna say, like the one thing I think that if I evaluate the way Canadians think about a lot of this stuff is like, COVID told them that the government will just like have their back, and that's like for better or worse, because it's not a good thing, but for sure. But a lot of people might just be like, yo, if that happens, like I'm not the only one it's happening to, and they're just gonna like fire up UBI or some stimmy checks or something, just a thought. But like I feel like psychologically that's how a lot of Canadians think about it, and maybe that's why they don't worry necessarily about it.
Interesting. That's a really interesting take, because I think I think a lot of the things, like, it's just like another layer of uncertainty, right? It's like, oh, there's this new technology that's actually, and I think there's starting to be, I think you're right, Dan, that few people really understand it or understand the capabilities of it or have played around with it, or and maybe in the rabbit hole as deep as some of the people on this call. But I also think that people are becoming a lot more like, I've just noticed, actually, it's funny, like just recently, conversations with people that are using it. It kind of started where people were almost using it like like a Google like search, right? Like another Google search, or asking it what they can prepare with the items in their fridge, right? And now it's like you've got everyone you talk to seems to be dumping all their financial information into it, or working in some capacity, right? Where or doing projects or co-work or whatever it is, but people are, I think, learning quickly on it now. It seems to be kind of shifting in that regard, but yeah.
For sure. Yeah, a lot of people, like when I got into the OpenClaw stuff, like this is, I don't know if you guys have heard of this stuff. It's like basically like, yeah, anyway. So
yeah, you just like, it's through WhatsApp, right? You
can build it on like any tech, like I message it, or like I just use it in like there's like a chat interface on my computer, and you just like ask it to do shit and it does it. It's like remarkable. I've never had like an aha moment with AI. I always was like, oh yeah, like it's cool. It helps like for podcasting. It's like, notes, questions, scripts, whatever. Transcribing something, turning it into a Substack article. Like, yeah, okay, it's good with text, right? Now it's like it has hands, right? It has claws. It has like, imperfect hands. And that was like where I was just like, this is totally insane, right? That it's just a completely, we're like a new frontier.
Just to be, and yeah, not to go down the AI podcast, but for what is the metaphor of the hands? What do the hands actually do? I don't really follow.
Well, it's just like it can do stuff. Like AI couldn't do stuff before, right? Like it could tell you stuff. It could have a conversation with it. It could give you text, but like the hands is
so
it's
actually
stuff on your computer.
Creating things. Okay, other than like
an
agent
capabilities.
Yeah.
Right.
Exactly.
Okay, I see. Okay.
Yeah.
But that was just for the listeners out there, not for myself.
No, yeah, it makes sense. Yeah, but all of that to say, like I you mentioned the security thing. Like people are like, oh, OpenClaw is so insecure. It's like people will just like. AI knows more about me than anyone in my life. Maybe Zuckerberg knows a bit more, but like honestly, it knows like everything, man. You just ask it questions. How much stuff do you think it knows about you at all times?
Yeah.
Can you clear your browser history? Asking for a friend.
Yeah.
Ask AI.
Yeah, you got to ask the AI to do that for you. Okay, well, so just maybe shifting back here to the Toronto market, but so. Thinking about opportunities, like where are you seeing any opportunities in this market? And I know we've kind of been, it was funny, we were pretty doom and gloom on your podcast, and it's had a similar vibe in Matt's words specifically. Where are the opportunities?
Yeah, I think I'm seeing like limited opportunity in the multiplex space, to be honest, which is sort of like, why we've really gone all in on that. Like, I don't think it's at its peak opportunity yet, but like the cost differential between developing, it's the only way housing is getting built right now, to be honest with you. There's no other way that housing is getting built other than small format. CMHC even put out a report showing like literally if you look at the average number of units on a new development that's launching in certain markets, like Toronto's down like 70% from like 200 to like in the below 100, right? So that's probably the only bright spot in the GTA right now. But the problem is it's still limited by land costs. Construction costs are getting better, DCs are coming down, CMHC multiplex financing, MLI Select on the takeout. And I think that's the only thing that's working in Canada, to be honest with you. I don't see anything else that's really doing well right now.
I think Ontario is a more mature market when it comes to multiplex. Like, are you seeing like I feel like we've talked a little bit about this on the last episode, but we're starting to see them marketed. But how established is the multiplex in Ontario?
It's like in Ontario it's piecemeal, right? So it's like on a deal by deal basis. The place where you're seeing it done at scale is in Alberta, where you've got like basically all the Toronto pre-con brokers like shilling these like pre-made sixplex MLI Select takeout deals that with like realtor underwriting, and like they're hot potato, but
Yeah.
but it's happening a ton there. Like we're getting an insane amount built, so it's well established. Like and see, like realtors are slinging the, I mean, you as soon as you get realtors going, it's like especially Toronto pre-con agents, like on their social media and whatever, it's like you just unlock the biggest sales and marketing engine. A bunch of people sitting around with nothing but time because they're not doing any deals, who coming off the sugar high of making like $1 million in 2021, looking for something to sling to people, right? And so everyone, like realtors are MLI Select, like they're PR engine for the CMHC product, and so it's well established, man. Like people are paying a lot of attention to this thing in our market for sure. Just not in Toronto. You get the actual 416 deals. They're small infill. They're a grind to get done. Like there's a lot of them happening. I think we got like 700 applications out right now, but it's a grind for sure.
Yeah, it's super expensive, and to Dan's point, I think the biggest issue with and look, I mean, this is all I do nowadays. I do CMHC stuff on a daily basis. I do it across the country. The hardest stuff to get done is in Toronto, strictly because of the costs, and that's every cost involved, from the studies you need to the net worth requirements to the permitting to the labor to the materials, everything. The biggest danger I see with a really great product, which is MLI Select, that inherently is a good thing and is helping a ton of housing get built, is it's going to get abused, and it is being abused, just like the pre-construction market was abused, just like every major trend in real estate has kind of, that has come and gone, is being abused. And there really needs to be some kind of audit on who's allowed to speak about it or market it. I mean, we're seeing ridiculous things, and my phone's sitting beside me, and I'm sure all of your phones are close by and probably listening. And now you're going to start to see a whole bunch of, random brokers that are standing beside like a 30-unit building and saying, guaranteed rents. And, this stuff is honestly borderline fraudulent and borderline illegal, in my opinion. And it's really going to, similar to what we saw with a similar program back in the 70s, the MERB program, multi-unit residential building program, which really got a ton of housing built back then when they needed it. That program was shut down for essentially, abuse and nefarious activity. And, I don't think this will last forever. I think it's going to play a very serious role in getting a lot of housing built, a lot of housing typology, which is purpose-built rentals, that we haven't seen for a long time in this country. But I think it will have its day as well, have its day of reckoning. And there are some people out there doing things that they shouldn't, and a lot of investors investing ignorantly for the same reason that they were investing in pre-condos, because it seems like the next get rich quick scheme. And if you know anything about real estate, it is get wealthy slow, not get rich quick. And if it's get rich quick, get out and get away from it.
You guys host the Canadian Real Estate Investor Podcast. Where are you guys looking in the country right now that looks interesting? Where are people that listen to you and people you're communicating with investing? What's exciting?
Yeah.
Well, the last time we answered this question, we blew up the market for ourselves because we had a couple of buddies in private equity just pile into the trade, and we built a pretty sick portfolio together. But Nick and I are no longer in it because they're just bigger guys than us, and also it made sense for us to exit.
They were angry at us because we were. I don't want to take too much credit here, but I was getting calls as a mortgage broker being like, "Hey, I'm bidding on this house. Whatever, can I get a pre-approval?" And I'd be like, I can't help you because, we're bidding on that house as well. And that, our partners at the time did not like that.
But all of that to say, like, so that was Cornwall, Ontario, by the way, which is still just this wicked market. I still love that market. Nationally, I'm very interested in places like Quebec. I think that Quebec it's just so mispriced, and it's simply a language barrier thing that like people don't want to do business there. And so that's really interesting. I always just look for market like dislocations in regards to pricing. I think there's a couple of markets in Ontario that are mispriced as well. Like, when I see a market like Sudbury, or like not even Sudbury, but like rural Sudbury or like Northern Ontario, that has come down as much as, a Windsor or a place that's actually impacted by the trade war. When, if I go to Northern Ontario, if anything, it actually might be a net benefit from the trade war. I think actually the Oxford Economics thing stipulated that. It was like everything that is trade subject would actually like improve Sudbury or rural Sudbury's economy, because the ring of fire and materials and whatever. So I like that market. I like rural or like smaller town Northern Ontario, to be honest. Those are the ones that really stand out to me. I would say I'm probably short. I'm short Alberta. I'm short Toronto, or the rest of Ontario other than like Northern Ontario. Short BC. Like Saskatchewan, Manitoba will probably just keep chugging along fine. Same thing with sort of like the rest of the Atlantic Canada, anywhere where houses are affordable, but there's no good investable trades in places like that. Newfoundland's been interesting to me. Like, it was on a bit of a tear there for a minute, but I don't know. It's tough to say, like, with population growth dropping to zero, whether or not that's going to sustain, right? So I think I covered everything there now.
Yeah. I like your answer, and you didn't really leave much for me there. So I'm going to take a bit of a different cop out here and say, I think for us right now, and we've spent years advising active clients, active investors, active builders, first time investors that are trying to figure that out. And I think it's less about what market is performing and more who is doing that deal and what is the deal in that market, right? It's so freaking specific at this point. We've been kind of coining this term, the age of the operator. I think you can get a good deal done in downtown Vancouver. I think I'm helping clients get good deals done in downtown Toronto right now. Our overall is, overall, am I telling people to invest in downtown Toronto? No. But if I find a deal and the right person in that, that all those stars align, then yeah, I mean, I'm still, I think Dan and I can both say comfortably, confidently, I'm still seeing good deals get done every day across the country. I work in almost every province outside of Quebec. That's the only province I haven't done a deal in. Referral I have, but, and sans territories as well. But, it really depends on who you are and what you're trying to do. I think the general, where to invest question, I don't think that applies as much now as who you are, what you're trying to do, and how good are you at it? Because right now you got to be good to invest in real estate. You got to understand the fundamentals. You got to have the power team. You got to have the net worth. You got to have the risk. It's really it's a different game than the last time you guys asked us that question.
What kind of exodus have you guys seen in terms of like just who you're talking to, or change? Maybe not exodus is maybe the wrong word, but presumably fewer people are interested in investing in real estate right now. But how has the conversation changed? Because the idea of the being a serious operator was not part of the conversation, let's say 3 or 4 years ago.
Yeah, I think that's kind of the point, though, is like it everybody thought that like it was a crowded trade, and that's when things get too frothy and you start kind of coming off the rails a bit. And like similar things you can see happen in other industries when the barrier to entry gets too low, as like and it was in this case because of credit. Everybody could make money speculating on pre-cons or whatever. The exodus is just the people who, if you look at the market 2016 compared to today, so like 10 years ago, it's the exact same market. The same people, same participants. It's not like any new or old entrants. All of the people who, it's like exact same thing as prices. It's just a round trip, right? All of the people who came in are all gone. So it doesn't really matter to me because I was never selling stuff to those people anyway. Like when people were coming to me like, I want to lever up and buy like 7 pre-cons and flip them, I'm like, oh, that sounds like an absolutely horrible idea. Show me the fundamentals.
Made so much money back then, Dan.
Yeah, no, like, yeah, you don't make a ton of money being a truth teller, right? But
you can sleep at night, and you're
show me
in the business for a long time.
Well, yeah. And honestly, like I don't know if a lot of the guys who were doing that are making a ton of money right now. Anyway, they're trying to put out fires and avoid clawbacks and trying to get deals to close. So like I don't think I made a mistake, but yeah, I think you just got rid of all the people who joined the industry during that period of time, and not like our content wasn't for them. And people come like listen to our show. Or like try and work with us and hear me talk about certain things, and it's like that's not my thesis. Like my thesis is like 20% increase, and I'm not even closing on this unit. I'm flipping it to some greater fool, but before closing, that's gone, right? Those people are gone, and it's good. One, they have no money, and two, their thesis was wrong, so they've just given up.
Yeah. Maybe as a final question, and I don't know if you guys are fielding this question very very often, but Toronto specific. A lot of people hurting, a what would you tell somebody right now that's maybe underwater, toying with the idea of selling? It's a challenging moment for them. Like, is it kind of stay the course, kind of an optimistic take, or is it like plug your nose and sell? What would you tell somebody right now who's hurting as a real estate investor in Toronto?
So why don't you talk to me 2 years ago, 3 years ago? I would have never let you do that.
That's just
start
pouring
building the time
sand,
machine.
salt into the wound, Nick.
Go get a side hustle on betting on prediction markets and I'm lucky enough that I don't have, honestly, a ton of those conversations. I do a little bit, but most of the, to Dan's point, most of the people that are attracted to the stuff that we do, most of the people that have worked with us, our legacy clients, our new clients that know the type of people we are, they weren't doing those deals. Here and there, of course, I have those conversations, and that is a question that I definitely get asked. And it's a really tough one to answer. It's a tough one to paint a broad stroke with, because you're talking to people about their livelihood. You're talking to people about potentially tens, if not hundreds of thousands of dollars worth of loss. So I'm very careful when I answer that question. I think the best answer I could give would be, really take a look at the numbers and, start talking to accountants, mortgage professionals, real estate agents, lawyers. And that's not a decision that should be taken lightly. It's not a decision that you should likely be making alone, without some very strategic advice, depending on how bad the situation is. So, that's kind of my cop-out answer. I try not to paint that question with a broad stroke, just because it is so sensitive for a lot of people right now.
Yeah.
Fair enough.
Mine would be like, you got to put yourself in a bucket. Like, are you a trader or are you an investor, right? If you're a speculator, if you're a trader, then you have to follow trading psychology, and you have to realize, like, a lot of people don't realize that they were trading real estate. They weren't investing in real estate. If you're a trader, the answer is rip the Band-Aid off, realize your losses as fast as you can, and get in a better trade, right? That's it. There's no solving the problem if you're speculating, but most people cannot accept that they were speculating. They think they're real estate investors. If you're an investor, it's easy. Stay the course. You bought a good asset, right? Keep clipping coupons, yield, add value, and improve the asset if you can. Become a better operator. There's not a lot of those people, and they don't need to ask me. So usually the answer that I'm giving is rip the Band-Aid off, right?
Yeah.
Yeah.
You want to lose money fast or slow, right?
Honestly. Yeah, that's it. I don't know. I mean,
maybe, and I have one more, because Matt, I think you said final question, but thoughts on the market over the next, this year and beyond?
I honestly thought we'd start to see volume recover this year, and I'm calling myself wrong already. Like the fact that we came out of the gates down 20% in Toronto, and then Korea stats came out today, actually February 18th, down almost the same, like 17-18%. For January sales volumes. I mean, sure, call it a snowstorm. I don't, like, whatever, I mean, unless we get to a really, really bad recession and rates get dropped to like 50 bips by, whenever that happens, that's probably the only catalyst. I thought OSFI was going to reduce the stress test, and that would be a catalyst. Not that I felt that was an appropriate idea. I just got the vibe that they were going to, but they just said they weren't going to a couple of weeks ago. There's no catalyst left, man. The only catalyst left are bearish. Like rate cuts, 50 bips of rate cuts will add a little bit to the market, but it's not going to, like, we just saw 250 basis points of rate cuts. It did nothing, So, I think it's, you catch the income curve. That's all it is from my perspective. Your marginal buyer is an owner occupier. Sooner you catch the income curve, the sooner we recover. There's two ways you can do it, right? You can drop 15% right now and you're on it and you start recovering tomorrow. Or you can wait 2 years and go sideways, and we have caught up to it, or 2.5, 3 years, right? Some combination of that price decline, time elapsing, maybe rates coming down a little bit to give a bit more leeway, will get us there. So I'm not my call was always sort of, we would see a bottom probably towards the end of 26. And this was like, I was making this call in 21. If Kuzma's a really bad outcome for Canada, I would maybe push that into 27. But I think, like, when I say bottom as well, I think you've kind of got a continued slow grind down. You've got a long flat. Like, go back to the 1990s. Like, it's not it's not binary. It's not down and then up or down or up. Like markets can also not do anything. It can go 0% for 2 years. That's a big, long, healthy bottom for people to trade in and out, use financing conditions, use inspection conditions, get a sale of buyer's property condition, a healthy market. That's what we should all be hoping for. And I think that's what we'll see, right? We'll probably we'll get to that flat point, probably early 27, 2 years of very little to no growth. And then you start slowly climbing back again as people's confidence, we've stopped moving down. Maybe we can think about going up now. Maybe I'll bid up on that property. Maybe I'll take a little bit of risk. Takes a long time for confidence to rebuild after what we just saw.
Yeah, I never heard the term new normal up until 2020 and some random time then, and I think we've heard it all way too often, and I'm scared to use it, but I'd say we're probably in this new normal for minimum another year and a half to 2 years. Dan and I talk to a lot of economists. We're lucky enough to do so. I know you gentlemen do as well, and that seems to be what all the smart people are saying as well. And doing a lot of research over the years on how recessions and cycles play out. I mean, the average cycle is about 8 years. Okay, so when did this cycle start, right? And that's just looking at it from a purely mathematical looping perspective. As Dan said, this one could be different, right? Like we can analyze history. History rhymes; it doesn't repeat. That could mean we've got 3 or 5 years left, depending on when you think things started to get bad. So, my advice would just be adapt to what's happening now. And if you can make it in this market, you'll be laughing by the time it turns around, and it will turn around. It just might have some more gray hair by then.
Well, maybe we'll leave it there. Oh.
On that happy note.
Yeah. Thanks.
Yeah.
Well, do you want to do the rapid fire here, Adam?
Yeah. Let's do. We got 5 lighthearted questions that we end every show with. Can you guys stick around for that?
Of course,
yeah.
So question number 1. Maybe we'll start with Dan. A book that you would recommend for our listeners.
Psychology of Money by Morgan Housel.
Oh yeah,
good one. Nick.
This is actually a book that Dan recommended to me, and I think it there was
there's 2 recommendations. Amazing.
There's a new that there's either like a new one or an updated one. It's the Fourth Turning.
Yeah, it's great.
And we'll blow you away. We'll put a lot of things into perspective that are happening right now. I'll leave it at that.
Okay.
Yeah, it is pretty eerie, actually, that book. Like when you're reading, there's a certain chapter where he's like talking about, it was written in the late 90s, I think. And there's a certain chapter where he's talking about things that might like happen during a fourth turning. And he's like, Russia, Ukraine, pandemic, blah, blah. I'm like, this is weird.
Okay. One habit. What is it, Adam? Habit?
One habit or belief or practice that's had a positive impact on your life. Or behavior.
Nick, in the last 2 years.
Relentlessly following up with people. I don't even care anymore. I will follow up with you until you tell me to F off. I had a client tell me that he was going somewhere else today, and I was like, I'm just going to bug you one more time just so I can show you how hard I'm going to fight on your behalf when you eventually work with me. I would literally act like a crazy ex and text you once a week until you never work with me or until you do. So that would be my recommendation.
A pitch to get people's contact information?
If that's what, hey, I'll take it.
Right on. That's
mine would be like
you should see what he does when you break up with him.
Yeah,
no kidding.
Yeah. You just got to bring that crazy ex energy to sales. Yeah, for me, I when I drop my son off at school every day, he'll like sit on my knee, and I'll go like 1 for 1 with him. We'll be like, we'll just like repeat, like, I guess you would call it like an affirmation, but it's sick to do it with somebody else. He's only 2.5, but it's a pretty good vibe. So I'll just be like, I'm gonna have a great day, and he'll say it back to me, and then it's like, I'm gonna be nice, I'm gonna try my best, and it's a good thing. That's probably the most profound habit that I've had happen recently.
Well, yours is way more heartboarming than mine, man.
Yeah.
I just look like a heartless sales guy.
You gotta go comedy. I mean, man, making money to put food on the table for your family is pretty heartwarming too.
Question number 3: What have you been binge watching lately, or a movie recommendation?
I just am on the last episode of Succession. So that one.
Oh, a little late to that, but what do you
I
think?
know,
It's
yeah.
pretty great.
I couldn't get into it the first time I tried, but now I'm like, I don't know, man. It's kind of like, like The Office, like by the end of The Office, and you're like, you just like, it's like Michael Scott's just like so pathetic, and you're like, I can't, it's like too cringe to watch. I kind of feel that way with the characters in Succession too. No, is that like the point of the show, that like they're supposed to be like, this guy was so successful and his kids are just losers and you hate them?
I think,
Is that the
I
point?
think that's a big
Okay,
part of
cool.
it. Yeah.
Okay, good. I'm glad.
They're not serious people.
Yeah.
I
Okay.
hope I didn't spoil
Yeah.
anything for you.
I'm on the last episode. Like literally, my wife just falls asleep like way earlier than me. Like when we try and watch a show, so it takes like five false starts. So
Yeah.
I'll finish it hopefully tonight. God willing.
There's no way she fell asleep during the bore on the floor scene.
No, that was it's fascinating scene too. What a guy, eh? That guy.
Nick, what are you watching?
You know what? It's so funny. I ask everyone this because I suck at watching things, and like I love movies and TV shows. I just work a lot, and I come home and I try to like look for something. And I spend like 30 minutes trying to pick something, and then it's like 11:30 or 12, and I'm like, yeah, I got to go to bed. I did recently watch one show though that I thought was really cool. I think it's called Your Friends and Neighbors. It's on Apple with John Hamm. That's where that meme of him like came dancing in the club. Really cool show. It was pretty good. It was good popcorn stuff. Nothing groundbreaking, but I'd recommend it.
All right. What are you listening to? Maybe we'll go back to Nick. Something you're on a drive by yourself. What music's coming on?
Oh man, there's going to be a boring answer as well. I saw this stat that after 30 years old, you don't listen to any new music, and man, is that accurate for me? I listen to classic rock, and this is a plug for something else. I've developed this playlist called For the Old Boys. It's like 150 hours or 500 hours of music. So I basically listen just like late 50s to mid 80s type music, and I will sing that in the car or the shower anytime I get a chance.
I have kids, so I do discover new music. I'm on the new Bieber album. Pretty good, to be honest. Canadian Icon.
Nice.
It's a banger. Yeah, for sure.
I've escaped that one. Yeah, that's interesting.
Dude, it's so good, man. Go listen to Speed Demon and Go Baby as soon as you can. Like right after this.
All right.
episode.
How do I get the one for the dads or what one for the old boys? What's your mix called, Nick? You should share that on Spotify with us here.
Yeah, I will. I'm pulling it up right now. It's because I rep it everywhere I go.
I've just heard of this. Isn't Nick's like a playlist influencer now?
Not at all, dude. I've put this on. I've put this on in our work session. So 113 saves, 54 hours of music. All right, For the Old Boys, check it out. You're welcome.
And this is your playlist?
When I die, I don't care about the podcast, the mortgage. Just remember me for this playlist. All right.
Last but not least, question number 5, which is, what is something that you've bought for under $1,500 that's had a positive impact on your life?
It's bought a juicer.
Mac Mini for my quad bot.
You got one. I heard they're in high
yeah.
demand.
Oh yeah. I was so early to the trade, man. I was like, I should have bought like more. I bought 2. I should have bought like 7. But
And have you had any, because there's all sorts of things that I've heard about, threats to your security.
So funny, man.
Blah, blah, blah.
So funny.
Yeah.
It's not. I mean,
Yeah.
dude,
No
I mean,
issues.
it would be a threat to your privacy, but everything is. I don't think it's a threat to your security unless you're an absolute idiot within like giving it your bank. Like I wouldn't, I wouldn't give a assistant or a VA my banking or any of that stuff, right? So why would I give it to this thing? So yeah, you can, if you're an idiot, you can definitely create some serious security issues. It has no more risk from like a hacking or security or privacy perspective than like Instagram is actually probably worse, like seeing my DMs or like my ChatGPT history or all of those things. So I think that's honestly like the industry actually maybe trying to gatekeep and like keep people out of it, to tell you the truth, because it's like, it is a really, I hate being a hype machine, man. Like maybe that's why I'm so bearish, is like I don't do this well, but like I haven't seen a piece of technology change my life before, like ever, I don't think. And that was like within days, completely different.
Wow.
Yeah.
Heard it here
Like
first.
to the point where I'm literally going all in on like building these things for realtors. Like we're building a OpenClaw wrapper like realtor business of like a SaaS version of our brokerage. Basically, we have an AI powered brokerage. We're packaging all of our tools, putting them in OpenClaws, selling them to realtors. Like it is insane how much it's changed my business, my life, my workflow, everything, dude. Like if it goes down for like an hour, I'm like, what do I do right now? Because I have to do like my job, my actual job. It stopped being able to do like LinkedIn outbounding. Like it's shut down right now, and I'm like, how do I do that? Like I have to copy and paste. I guess it's just a task that's not getting done anymore. Crazy, man.
Huh.
Yeah.
That's
Yeah,
next
maybe
episode.
Yeah, no kidding.
Yeah, I'll put you guys on with my guy Shamir, who's like my technical founder at my brokerage. He can walk you through it. I know nothing about this stuff, but he's a genius when it comes to that. So
That's incredible. Well, hey, thanks for taking the time today, guys. It was great. If anyone wants to learn more, follow the podcast. How can people find you?
The Canadian Real
pretty
Estate
easy.
Investor Podcast. Yeah, sorry. Make sure you invite him to our event, Nick. That's the key.
Yeah,
We're gonna be
Canadian Real
banned.
Estate Investor Podcast on all platforms. Follow Dan at Daniel Foch. Follow me at my buddy Nick. And come out and see us when we're in beautiful British Columbia and Vancouver, Yaletown Roundhouse, April 8th. We'll be there in person. Looking forward to it.
Yeah, let's do. We didn't make a code yet, but we'll just do. I see your guys like acronym there. VREP. Use a code VREP, and we'll give them a discounted ticket. If you guys wanna do that, and we'll give you a bunch to give away to friends and listeners and whatever.
All right. Well, thanks again for your time.
Thanks, fellas.
Thank you guys.
So there you have it, folks. Our discussion with Dan Foch and Nick Hill from the Canadian Real Estate Investor Podcast. Past guest fan favorites. They've been on the show before. It was a while back. It's good to reconnect with those guys.
Yeah, and if you want our take on the Vancouver real estate market, you'll want to tune into their show to listen to. We'll guess, I think, in a coming up episode. It's either going out this week or in the coming weeks. But we cover a lot of ground, put a lot of stats out there as well, and I think we'll probably be doing a similar show coming up in the next week. So we'll kind of keep you up to date with all the talking points about the Vancouver real estate market. But before we cut for the day, I should say we are big fans of working with people in the VWeb community. So if there's anything we can help with buying or selling this year, we'd love to work with you. Rockstar 5-star review on Google. Check us out. You can find out more at VancouverRealEstatePodcast.com and of course ScalinaRealEstate.com. And Matt, how can people get in touch with you?
They can get in touch with me at any time to take advantage of our resources or chat about the market at 778-847-2854 or Matt at VancouverRealEstatePodcast.com.
And if you want to talk to me about the market, I've been having a lot of great conversations about the market lately with people that are, in and around the Lower Mainland. A lot of people checking in. If you want to do the same, it's 778-866-4574 or Adam at VancouverRealEstatePodcast.com. Of course, we've got that nonpartisan line, info at VancouverRealEstatePodcast.com. Have a great week, and next week, another fantastic episode.
Take care.